What's up, traders? Welcome back to the channel. So Bitcoin has pulled back a little bit more than 9%. We can go from swing high to swing low. You can see you're right in there at the 9% area. It did put in a low right around $90,000. I was able to catch that long because essentially all I did was I knew that we had pulled back almost 10%. And I was saying, well, this thing is trending to the upside. Even though we did break this ascending trend line here to the downside, I was willing to put in a long here at 4-hour support. And we got a pretty good retest of that right there on that candle, which also was the next day's open. And then prices moved up since then and done pretty good. Now that descending trend line does match better on the daily time frame if you take it from this swing low right here from November the 12th, that Tuesday, and then put it to this low on November the 17th on Sunday. It does pretty good in capturing the lows. And you can see the breakdown day here was a pretty decent breakdown as it puts, that trend line right around the midpoint of the candle. So that does suggest that there was a little bit of heavy selling that day to push it through that descending support or ascending support. Now, another thing that you've done here is you've created a descending trend line above price, and you have a daily supply zone right here that you have not closed the daily back above. So in my opinion, this is the area that price needs to close a good strong move back above if we're going to see any bullish continuation. But right in this area around 97 to 98,000, you've got three areas of confluence for resistance. Today's the weekend and tomorrow's the weekend, so I do expect muted ranges for today and tomorrow, but time will tell. Now there is a CME gap down here, roughly around 80,000 down to about 77,000. We can go check that out by looking at it on the CME chart. So here you go on the CME chart. Now we did get above $100,000 when we had the initial bullish move. You can see that the high comes in at $100,170. This is the CME futures. You have retested that level and you did break it. So you created a new all-time high of $100,315 on yesterday. Here is your gap. Like I said, it was around 80,000 down to about 77. So I went ahead and drew in that gap on the spot chart. The spot chart trades 24/7, so obviously there is no gap here, but that's roughly about where the gap would be filled on the CME chart if Bitcoin were to pull back all the way down there and do a gap fill. Now, let's go ahead and just see what a percentage down move that would be from the all-time high. You're looking at a roughly 22.7% down move. And we're not really seeing anything on the charts that suggests we're going to see that. There are a lot of cryptos out there that are absolutely flying to the moon right now. If we pull up the Bitcoin dominance chart, you can see for the last 2 weeks, you had a little bit of choppiness up here around the 61% area, and then several days of just straight down move. That has caused a lot of altcoins to explode. If I pull up this screenshot, you can see here that you got coins that have already moved and are up almost 200 and a little over 200%. The majority of these coins falling in that 100%. And then over here, you got a whole bunch of coins that are almost at 100%. And, so you've already seen massive moves on altcoins while everybody's gearing up for alt season. I would arguably say that alt season has already started, and a lot of people are going to find difficulty positioning themselves looking for new positions on these things, especially if they've already ran a couple 100%. Just be very selective in what you look for. If you are trying to catch alt season, then just be very careful on the amount of leverage that you're using, because it's very difficult to stay in these big movers, especially when they're flying all over the place. So just keep that in mind. So we're going to go over here. I have put in a fib extension from the bull market that we got from the end of 2023. And then here's your open right in this area. This is when you started 2024. But I used this entire bullish move here from that swing low. If you look at it on a monthly chart, it doesn't really account for any of that consolidation that took place here in January. You can see it a little bit better. This was a monthly consolidation similar to what we got here. So if I pull this up, you can see it better. Like this is your consolidation here. Here is some consolidation here. So your first initial bullish move, then your consolidation, then your initial breakout move there. So essentially I've taken that low and just drawn it up to the old all-time high and then captured the sell-off move that we got from the yen carry trade unwind. And that gives us a pretty good target up here at 1 standard deviation from this expansion. All right, so it's not a 1 standard deviation move in the realm of options. It's considered a 1 standard deviation move from the fib extension. And then if you look up here all the way to 4 standard deviations, that'll put you in and around $275,000. Now, I do not expect this to be my target. I'm just showing you projected targets from the fib extension. All right, we go into the daily time frame and look to see, was that resistance playing in here with that fib extension? So if you would have done the fib extension to this low, it would have gave you pretty decent areas to look for profit taking areas. Remember, in a bull market, you're not looking to take fresh short trades. You're looking to buy support in a bull market because your objective is higher prices. And as long as a bull market is happening, you can stay in your trades much longer, because if you're trying to take those short entries, you're getting stopped out over and over and over again. We've been bullish on this thing for a long time, right? Since the weekly got back above the 50 on the RSI, that's when we started being bullish again. We knew that this was a consolidation and nothing more. And we did expect Bitcoin to break out to the upside, and that's exactly what has happened. But you can see here, once you did break out above the all-time high, you didn't really get any resistance from the 618 extension or the 786 extension. It wasn't until you got to the 1 that you started to see that resistance coming in there. So not only do we have daily supply, an ascending trend line that price is now under, and a descending trend line that price is still under, you also have this fib extension confluence for potential resistance. But with that being said, I am long from $91,000 as I bought 4-hour support. So I want to see it continue to break out and continue to move higher. And I think it will. It just needs to consolidate these higher prices. And as long as it can maintain a range up in here, then we would expect that bullish continuation to continue. So Bitcoin looks, it still, in my opinion, looks very good. A 9% correction. When you break out above an all-time high and you have an asset this volatile, that's pretty much par for the course. Here's the options expected move from last week. You can see that we really didn't do anything last week because it was a holiday week. That's mainly why you didn't see really big ranges. But here on Friday, you closed perfectly right under your weekly expected move. The high is going to put you at roughly 60.96 on the SPX, and then your low expected move is going to be 59.68. That is a 64-point move. This ratio right here is growth versus value, growth being in front. So if this chart is moving from the bottom left to the top right, that means growth is outperforming value. That is typically what you want to see in a bull market. If I pull up your moving averages here, you can see you did have a nice little pullback for a little bit here. And if I go to the weekly time frame, you can see that we've been pulling back for about 3 weeks here. However, you're basically unchanged for the last 3 weeks. It's still very constructive. The chart is still migrating to the top right, which is what you want to see in a bull market. And if we go look at tech versus energy, we did have a slight pullback here, right down to right around the 200 simple and the 200 exponential. This is where we've seen a pop in XLK. This is what we want to see if we're going to look to get long potentially any tech stocks. We want to see the XLK finding support and then starting to move a little bit up. Let's go look at the XLK by itself briefly, and we can see that we have pulled back here. We did find support around the 50 exponential on the daily time frame, got a nice little move, and then another pullback, and then we expanded on Friday thanks to Nvidia and Microsoft. Got a nice little move here on the daily time frame. We came down, we tested an area of support. Now, I did post a tweet talking about looking for potential support for intraday trades. I posted one here on NVIDIA saying that I was going to be watching 136.15 for potential bullish entry. Now, I did post NVIDIA and Microsoft, but I posted this chart too quickly as I was looking for potential support to hold at 420.72. Now, on the open, you did get a 30-minute close well under this level, but you did retest the 418.01 level to perfection, and that is, in fact, where you bounced from Microsoft here. So you can see this is your daily open. So at the market open, you had a push lower, 30-minute candle closed below that. Then you had this move lower. Let's go look intraday. We'll get rid of the moving averages here. Go look intraday. So here is that move right there. You did close below that support, and then you had a move lower and then another close below. But the very next session, or the very next 30-minute period, you did get a nice bullish move back above support. So this would have been a beautiful entry on Microsoft. However, what I stated in the very next tweet was, out of the two last posts, if you were looking for a day trade, I would prefer NVIDIA over Microsoft because of the weekly expected moves. So here you can see Microsoft up here in the top left-hand corner. This is the Microsoft chart. This is your weekly expected move. Now, this is an indicator. I don't put these lines on the chart myself. It is an indicator, but the indicator is not 100% accurate. So in this case, it could be $2 off. Your expected move could literally be there, and the top bottom edge could literally be in here. It doesn't really matter. It gets it close enough. This was what we were looking at going into the open on Friday. You can see with Thursday's close here, you were right at the top edge of the expected move. So at best, you're at the top edge of the expected move. You're not necessarily wanting to look for bullish entries on something like this because you're right at the top edge of the expected move. Now, you can obviously break through the expected move and you can have bullish continuation above it, but that's the less likely scenario. The more likely scenario would be to look for a bullish entry if you are around the bottom edge of the weekly expected move, which is why I said I liked NVIDIA for a long trade better than Microsoft, because on Thursday we did have this expansion. We had an open and an expansion lower on the day. We did ultimately punch back up the bottom edge of the expected move, but we closed under it. So that meant going into Friday, I was looking for a bullish move up to roughly right around this area here, as that was Wednesday's high. I never look for range expansion above a daily candle, especially if I'm looking for an intraday scalp, because I'm basically trying to trade inside of the previous day's range. Let me go show you on the chart here. So here on Friday, we were opening well above that lower edge of the expected move. That was a plus, right? That's one thing that I liked about it. And secondly, I was just bullish because this chart, even though it is kind of choppy and sideways for right now, overall, the chart is bullish. I mean, there's no other way you can look at this than to say it is bullish. You're bullish on the year. You're bullish on the quarter. Like, you're just bullish. This is a very bullish chart. So you look for bullish entries at support. Had a very, very good test of support here. You have an ascending trend line coming in from this low here, tagged to this low here on September the 6th. And this was a retest of that. And we got a bullish reaction from it. And then Friday, we were opening higher. So essentially, pre-market, intraday, I was looking for a support test. Right here, we got it. Right on the open. I mean, you cannot make this stuff up. Look at that test. We go into a 5-minute chart here. It doesn't get no better than that. We open, and then the market pushes down straight to the support that I alerted everybody to watch previously. Basically, at this point, you wanted to see price start to close higher than support. You did get that. You got a bullish expansion here. So on this pullback down to this 5-minute open is where you would have taken entry. That's where I took entry. My target was 139. not 139.50. 139.50 would have been the absolute top. I took profits at 139, right at 139. 50 cents lower than the expected resistance. And you can see we did expand up straight to my profit target area within 20 minutes. Boom, boom, boom. Done. The trade is over. It's a couple $100 on one contract. So that was a fantastic scalp trade. And you can see for the rest of the day. Now, it did close early. It did close at 1 o'clock. But for the majority of the rest of the day, it didn't do anything. So you could have gotten out of that trade at 10 o'clock in the morning, 10:05 to be exact. At 139 would have been my target. Now on the daily chart, we'll pull up here. I can show you. Basically, this is just an area. We broke down here, and you can see here on Tuesday, you wicked up to that daily open and then found resistance there. So that's why on Friday, I was looking to take profits at 139 instead of 139.50, because I knew that Tuesday's high was lower than 139.50, and there was potential to not even get up there. Hence the me taking profits at 139 even and not waiting till 139.20 or 139.50. And I'm glad I didn't try to take profits at 139.50, as I would not have got filled on the exit. As you can see, that wick came in just shy of 139.50, although it did take out Tuesday's high. But that was the reason for the entry, was support. And the reason for the exit was resistance. It's that simple. Now, I did not predict that price was going to do that. Technical analysis does not predict what price is going to do. It gives you good areas to look for potential entries and exits, so that way you can mitigate your risk and your losses. Going back into the 5-minute time frame, seeing how we were looking at this for potential entry, or if we started to fade under this support, our next potential entry for bullish entry would have been 134.70. So basically, you would have probably entered on this wick low here. Your stop would have been the low of day, which is this wick here. And essentially, we would have been stopped out if we got a downside expansion on the 5-minute time frame. If it would have looked something like this, right? Then we would have been looking for support here, but we would have gotten stopped out. So there is a really good chance I would not have taken this entry, since I did get a nice bullish reaction from the initial support level that we were watching. If you want to follow me on Twitter, it is simply trade_talk_ right here at trade_talk_. So you guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.